Everyone, welcome to another market review. This week was pretty confusing. It tried to go up, it tried to go down, everything failed, and we are stuck in this very, very tight range and going nowhere. Uh, Data has generally been good. We had CPI this week and jobs data last week. I didn't really go into them last week, but I'll show it this one. And de-escalation on Iran, but still going nowhere. Um, let's go with the bread stuff first. So we went nowhere. We were in the like 60 UVO, 60 DIVO kind of setup. Friday was basically 50-50. Hasn't really gone down, hasn't really gone up. So again, going nowhere. Then we look at the inflation stuff. The actual inflation print was 2.7, the one in yellow here. And these are offset data for Philly Fed prices and ISM prices and some other stuff as well. And everything is going down, as you can see. This is what is this one? ISM non-manufacturing prices. So it seems that inflation is still in the deflationary wave and nothing is happening. We also have Truflation, which is showing a major drop coming up. And on the nowcasting side, so this was the print from this month. It came in slightly hotter than anticipated. And next month, we're supposed to be getting like a 2.3 headline. Maybe it's right in the middle, like 2.34. So maybe it's gonna be 2.35 and it becomes a 2.4. Or if it stays below 2.35, it's gonna be a 2.3 headline. So very, very low. But looking at reflation, it's really going to crater next month, and I think this is valid and true. Now on the jobs data, employment, big picture, like all these indicators that are generally correlated, and this is initial continuous jobless claims, which dropped off last week, and we see it in the unemployment is 4.4 here, the blue one. And again, nothing really showing that there's any danger in the jobs market. On the contrary, I kind of think we have a recovery coming for us. Not necessarily a quote unquote real one, but the deportations and the immigration impact is finally catching up. So fewer workers, same amount of jobs. That means lower unemployment. Even though the actual number of workers may be coming down, uh, that will also be coming down with inflation, not inflation, with unemployment somehow. So again, nothing really scary and showing recovery. Where I want to get to this is that it's kind of surprising to me that we haven't broken out yet. And even though things are somewhat scary, I think we continue to go nowhere for another week or so. Was looking at the Bollinger Bands as well, like we're going into contraction here on the purple. So basically green means expansion upside, yellow means expansion downside, and purple means contraction when Bollinger Bands are contracting. It's not just Bollinger Bands, some other stuff as well. But we're generally in contraction and nothing is happening. And most likely we will keep seeing this for another week or so. So another painful week in which things go nowhere and it feels kind of bad because uh, positions don't go anywhere, but you're decaying theta and so on, and this is kind of the setup. Oh, too much. So I'll delete these ones because they're getting in the way right now and try to draw the thing with the Bollinger Bands. And also the green one is the 20 MA, so we are above the 20 MA. So something like this on this upside, something like this on the downside. So basically our range is very tight and we're gonna do something like this before eventually doing a bigger move either to the upside or the downside. Next week is also a short week. Monday is a closed market, and things are going nowhere. and I don't know where they're going basically. Based on the economic data and what has been happening in the real world, we should be going up. Based on like vibes, we should be going down. Yesterday we also had like not yesterday, this week we had like a huge underperformance on software, banks because of earnings. This is also somewhat software, like Crowdwork, XYZ, Microsoft itself sells a lot of software and so on. Uh, so everything software as a business is kind of went nowhere. Semis kind of did okay, some of them because of TSM earnings, and we had industrials and consumer defensive utilities. Energy still doing pretty well. Uh, the thing I'm kind of wondering, and I've been trying to think about it more lately, is how the hell does everything make sense? Like, for example, how do industrials go up? We have commodity prices increasing, okay? 1 week performance, okay. So we have commodity prices increasing, like copper and stuff like that. How the hell are industrials going up in a context where commodities prices are going up? And on the other hand, we have stuff like RAM prices, which are a commodity for tech, but on one side we have tech and RAM prices are good for stock prices, even though they're bad, and a world where commodity prices are good for industrials in a world where they are not as well, because it's kind of the same thing. Like RAM prices are the commodity of the tech world, and this commodity prices are the commodity of this. And in theory, it should not translate into higher prices. It should be more margin squeezes. It should be more lower volumes, but higher prices. So we should be getting inflation. The question is, why are we not getting inflation? Well, one big answer for this is energy prices, and oil hasn't really moved anywhere. And the other one I think is bonds and USD. So, like I said, I've been thinking about this, and my theory is as follows: we are seeing the equivalent of an energy and dollar carry trade happening, and that this is what is pumping the market. Basically, you saw headlines this week about Move, the VIX of bonds making new cycle lows, and it is making a new cycle lows. But what are bonds? Bonds are basically cash, and this means cash is being suppressed. As well, the DXY went to lows, and it's not really moving from this range, it's staying here. So this is kind of like a carry trade against the dollar on one side. Basically, everyone is quote unquote short the dollar, and we see it in other commodities like precious metals. So this is being funded by a short dollar trade. It's not necessarily that commodities are more valuable, it's that everyone is shorting the dollar to buy this kind of stuff. And the second piece of this is the short energy trade. Again, not talking about energy stocks, those are kind of irrelevant, it doesn't matter. But we are in a world where, aside from short dollar, everyone is short oil or short energy. Because this is kind of the piece that will have to break for the market to break down. Like if because it's all a loop, or it's all connected in a way that if energy starts going up through oil, then inflation really is coming back. And then if inflation is coming back, bonds can no longer be dismuted. If bonds start going up, the dollar starts going up because again, if higher yields, then the dollar becomes more appealing. So for this bubble to pop, and I'm not talking just about the AI bubble, I'm talking about the commodity bubble as well, because I it's starting to go into bubble territory. What I think will happen, not over the next couple of months, when, as a sign of things are getting close to breaking and getting us a bigger correction, maybe it's not a bubble pop, maybe it's like a 15-20% correction, is going to be basically what we see in VIX before a big pop, like making higher highs, slowly getting higher but not really popping off, and eventually a big blow off move. And I think we will see the same thing both in this case DXY. I think it will not be reflected to bonds, but although it may be. So we should be seeing DXY start making higher highs, which it has. Let me draw here. So something like this. And we should see the same happening in oil, which again, we sort of are. But this is going to be a slow build up, like 3 to 6 months, something like that. Obviously, I can know for sure, and no one can, but the point stands. So just like we see like this 2 to 3 months build up in VIX before pop, we should see the same in oil, and we should see the same in DXY, and potentially even in stuff like TLT or TXN. Like before it finally pops, it will keep being suppressed because this is the world's the thing financing both commodities going up and AI going up. So until these things actually reaches maturity and the build up gets to unbearable levels of suppression, like something like this, let's draw it out. So let's imagine we see, first of all, this is the really open for oil. When this is going to happen, most likely it's going to become support. So something like this, it builds up over months and months and months, and maybe somewhere like late spring, beginning of summer, it will no longer be able to contain itself. So it will go crazy, and the same will happen for DXY. Most likely this 100 level is going to keep us capped for a while, but we should be seeing it do like this and this and this and this until eventually it blows up as well. And again, TLT, for TLT, this is going to be, I don't think we get a breakout. I don't think we get a breakdown. More like this. But TLT also will probably be capped by this AVU up here, and eventually it will blow up and go nuts. So, like I said, after thinking about this for a while, about the mechanics of it, about what's actually fueling everything, and I think the fuel is basically financial suppression and energy suppression. And we know for sure that these are the policies of the United States under Trump, especially for the energy part. Like he wants to keep oil down. This is just like a random pop because of the Iran thing, but it's not here to stay. And I think one of the reasons why he stays off on an actual attack was also like he didn't want oil to start popping and going out of hand. So based on what I've said so far, my expectation is that this trade has already begun, but it will take 3 to 6 months for it to play out fully. And just looking at it like April, May, beginning of April is when the window of the explosion up is begins. It may not be April, maybe it's June, maybe it's July, something like this. But this is when I think we get the window of opportunity for the big correction that we should be getting. Until then, we just kind of go nowhere. Let me clean this up. I'll do it on the US 500. So we just kind of go nowhere. Nothing really happens. Obviously, we will go higher, but it won't be in a spectacular fashion. Like we will just drift with eventual surges and probably prolonged periods of just going nowhere. Like let's say we break out, we do this for another week or so because we are in the Bollinger Bands. Actually, no. Let's draw it again. So like this goes higher. So we probably break down, but it's a fake out again, and we go higher, and maybe we do this, and maybe we actually go to 6800, but eventually we go higher. We hit like 720 or something like that. Or the bullish version of this would be go down, go up, and we break out, and we go to 720, we go down again, and so on and so on. So we go higher, but not in a very meaningful way. And what we saw this week, for example, with software, 1 week performance, and banks, there always has to be someone who doesn't participate. Like, for example, we had some rotation into consumer defensive. Now I kind of expect that consumer defensive will stop going. Maybe they go up for another week, especially if the market, if we get the play out of the pullback scenario, like if we get the playback for the pullback scenario to 6,800, I would expect consumer staples keep going higher for a bit more. But once we get a bounce from this area here and start going up again, I would expect we get rotation. We get maybe software bouncing a bit, we get banks bouncing a bit, we get this underperforming. If oil it gets suppressed again, I would expect energy gets suppressed again and starts underperforming, and so on and so on. So someone has to lose, someone has to win. We this get used to the heat map for the market to look like this more often than it is now. I don't think we will get, maybe get a week from time to time in which everything is green, and that will be the surge that we would get like to 720, let's say. But more or less, I think this is our future for the next couple of months. Uh, Occasional week where everything is red, occasional week from everything is green, but every other week should be like this. Some winners, some losers, and the extreme is what keeps the market from going uh, too high or too low in for too long. So this is kind of my thesis going into the first quarter. Next week we also get earnings, and we have the first big name from tech, which is Netflix. I honestly don't know. I think they've been trying to reduce costs. Most likely, all of tech has been trying to reduce costs like crazy. Question is if the market likes to what they see in this. Honestly, I don't see it recovering very strongly. I mean, let me rephrase. So we have these two combo AV ups. I think any rally, if we get it, will be stopped by this AV up. So we will keep the pattern of lower highs or higher highs. It's not a market where to it's probably gonna pay off to stay long for the long term. But it's going to be a swingy market where like you take if you get a 10-20% move in a stock, you take it and that's it. But it's not the kind of market where you this is 25%, so this will be quite decent, especially with options. But it's not the kind of market where you keep holding on in the hope that maybe it makes a new all-time high. I think it's gonna be pretty swingy and prone to theta decay. So maybe selling options is also a good strategy in this market, but I don't have enough experience with that, so probably not gonna do it. But yeah, this is kind of the setup. We'll see what Netflix earnings brings. Then the other week we have the other mega cap starting posting as well. Again, I don't think they're gonna have bad earnings, and most likely we're gonna get positive surprises, in my opinion. But this someone has to lose for someone else to win for the market not to go too crazy. But my bias is somewhat bullish. I would expect more upside before more downside in a significant manner, and that's kind of what I'm going with. Okay, that's it for this week. Have a good one. Bye bye.